Good morning. I'm Peter Milios from the Finance News Network. Stocks retreated on Tuesday as Wall Street awaited the results of this week's Federal Reserve policy meeting. Overall, the Dow Jones Industrial Average lost 0.31%, the S&P 500 slid 0.22%, and the Nasdaq Composite slid 0.23%. Disney slid more than 3% after announcing plans to nearly double its investment in its cruise and parks business. Deere, often seen as a barometer of future economic activity, fell nearly 3% in the session after investment bank Evercore ISI downgraded the stock due to agricultural production concerns. The highlight of New York's day was the debut of Instacart, the latest company to spark hopes of a revival for IPOs. Instacart's shares opened trading at $42 each after selling for $30, the top of a marketed range, to raise $660 million for the company and selling stockholders in the year's fourth biggest US IPO. The shares, which jumped as much as 43%, closed at $33.70 in New York, giving the company a market value of $9.3 billion. The central bank's two-day meeting begins on Tuesday. The Fed is not expected to raise rates when announcing its decision on Wednesday, with traders pricing in a 99% probability that the central bank skips a hike, according to CME's Group's Fed Watch tool, a gauge of pricing in a Fed funds futures. Traders are pricing just a 29% chance of a hike in November. The Fed will also offer economic forecasts on Wednesday. Investors will watch for commentary around the path of inflation and the future of monetary policy. Leadership of the striking United Auto Workers Union said more members could be called on to withhold labour if progress is not made by a Friday deadline. Stellantis advanced more than 2% in the session, while Ford and General Motors each added more than 1%. West Texas Intermediate and Brent crude prices settled lower after hitting highs not seen since November. The move seemed to buoy market sentiment and lift stocks off their lows. Overall, turning to US sectors now, all sectors except tech, health and communication services closed lower overnight. Energy was the worst performer. In commodity-related news, Bank of America notes that the recent spike in iron ore prices can be attributed to a surge in purchases by Chinese steel mills, which had significantly reduced their stockpiles before. This increase in demand coincided with a decline in mill and port inventories, leading to higher iron ore imports in August. Despite the price rally, Chinese steel mills are still experiencing negative profit margins, which typically discourage raw material purchases. The key question is which factors might sustain this iron ore price rally going forward. The price of WTI crude oil for Cushing delivery has reached its highest premium since November, with futures surpassing $90 per barrel. Additionally, overseas buyers are now facing an extra cost of $1 to $2 per barrel to transport the crude to the Gulf Coast for export. These elevated prices are making American crude oil less attractive to buyers in Asia and Europe. Historically, the US has been a go-to supplier for these regions when there was a global oil shortage, often driven by OPEC plus production cuts. However, the current high prices are making American crude less competitive as a solution to the global oil supply gap. China's copper industry is experiencing a slowdown as it approaches its peak autumn season. Despite government support, reports indicating weak demand are causing concern among investors. Autumn is typically a busy period for copper fabricators, making this downturn worrisome. Approximately 25% of China's copper demand comes from the construction sector, which has been affected by the real estate crisis. Additionally, analysts are less optimistic about refined copper demand in the second half of the year due to China's slowing solar expansion and reduced household purchases. Overall, the SPI futures are pointing to a 0.2% fall. Thank you for listening.